All right. So I wanted to talk about today something like a goal of mine that, and I haven't really seen a whole lot of people post videos like this, but I think it would be kind of interesting to just kind of um, document the sort of journey that I have. And what that journey is to my first $100,000, right? So the $100,000 that is split amongst my investment portfolio, all the different sort of means that I keep my capital in, such as cash, such as, stocks and things like that. So I wanted to just kind of, do like a maybe a bi-monthly or month, I guess bi-weekly would be it, right? Not bi-monthly, bi-weekly or a monthly documentation of kind of like where my finances are at and where my money is as far as like my goal to the first $100,000. And reason I wanted to do $100,000 not a million is because you got to get to $100,000 before you get to a million. So this was the past path to my first 100K. Eventually, the goal will be to get to a million. So one of the things that's really important, I've been kind of messing around with investing and things like that for quite a while, but I've had my ups and downs. I've had the learning experiences, taking too many risks, things like of that nature. Also, just not having discipline or not having profit taking strategies and things like that. Kind of neglecting the lower risk methods such as just investing into the S&P 500, having gold, silver, all of those things. Plus, also just not being able to maintain and have a balance of my own personal finances and budget and things that that I actually need to account for in real life. So let's kind of go over a couple things before we kind of start going into my investment portfolio breakdown. So some of the things, right, would be keys, right? So the keys to getting to this first 100K is having a strategy for one, which I'll kind of go over my strategy here in the next couple moments, and sticking to that strategy, right? With the knowledge I've accumulated over the years and maintained discipline, I should be able to accomplish this goal. So I've never before in my life had like an investment portfolio strategy where I've actually allocated everything into strict percentages and rebalanced those percentages. It's always just kind of been like, I have no idea what I'm doing. Let me kind of figure it out. So here's an example of my investment portfolio breakdown. So um, the first thing is one, I'm going to kind of go over why I think this is so important. This is just kind of what I've learned over the years is, to be have a higher percentage of my portfolio in low risk assets, but also make sure that I'm maintaining um, a consistent percentage for each asset that I have my money invested into, all while also having stable employment and things like of that nature, which is the most important. Making sure that for one your own personal finances and everything like that are actually secured before you can start investing. So here's a little breakdown of my investment portfolio. So for one, we have 65% of my money is going to be invested into low risk assets, right? So of that 65%, 15% being cash, 20 cent 20% being high yield savings. There's some high yield savings accounts that you can get that can get you, like 3 to 4% annual, which is pretty good. And then 20% of that is going to be in an S&P 500 ETF. That ETF is going to be VOO. 5% will go into a gold ETF, which will be, I think it's IAU. I have it down there earlier, or I have it later down in this list. And then a silver ETF, which will be SLV. 5% in a silver ETF, right? So this will be my low risk, what I'll be doing and how I'll be keeping my money. This allows me to have a little bit of cash on hand, which is always kind of useful. You want to have a little bit of cash. That way, if expenses or emergencies come up and things like that. Um, some in a high yield savings. This is a pretty liquid means as well, but it allows me to be earning, a little bit, 2 to 3, 4%, whatever the best interest rates are in the market for whatever bank I put my money into. It allows me to have that still growing and not, kind of just being, um, losing its value because, the dollar loses like 7% of its value every year or something like that. Then after the high yield savings, we have our money in the S&P 500. I've been a firm believer in the S&P 500 for a long time. I just never really kept my money in it because, like the S&P 500, let's kind of do this so you can see, right? So let's see, average rate of return on S&P 500 last. Yeah, you see here, the average rate of the return of the S&P 500 has been between 9.8 to 12.39%, which is pretty good. I mean, if you just hold your money in there and let it compound over time. But I've been known about that. I've just kind of taking way too many risks with cryptocurrencies and things like that because obviously I'm a little younger, so I got to kind of see some of the upside of Bitcoin, and just through like certain things happening in that with like Luna, which kind of really wrecked me like a couple years ago, and I kind of like got out of crypto, and then also too with just personal instabilities and not having um a good enough source of income to be able to keep investing consistently, or needing to cash out money for personal savings. But all those things are I'm kind of done with. I feel like I've grown and matured enough to where I have my head on straight, to where I have this objective and this goal, and I have a steady income, and I have a consistent income, and I feel like my priorities and the things that I value in life are like really, really kind of where they need to be, as far as it's like, I don't really, my only goal right now is to get to here. So, whether that's, kind of destroying my, my need for material possessions and things like that, of having, expensive things and buying all this sort of stuff. I'm just focused on this. So whatever I need to do to make enough money to eventually get to this, because I want to see this number, right? So, now let's go into the other parts of my portfolio, right? Because I talked about the S&P 500, and then I'll do some examples so you guys can see like how. Because really, what I'm trying to do is I'm trying to create a flywheel, which is going to compound by obviously the kind of phenomena of compound interest. For if you're unaware of how compound interest works, which is what kind of keeps me moving and grooving at the end of the day, and while I'll work 80 hours a week, whatever it is, to get money, because I know like if you do these things for 5 to 7 years, you'll get into your later years, 35, 40, 45, and it'll be pretty crazy how much money you can actually start making. So, because my whole goal here is to kind of build myself up, this sort of interest flywheel, to where eventually, the interest I'm earning from my assets is making more than I'm earning from my job annually, until the point then I can keep investing it, until where now it's like the interest I'm earning with my investments is now earning me double to what I could be making at a job. So then I can, and part of that is like, since I'm a kind of a minimalist person now, I live simply. If I'm making double off my assets what I'm making from a job, I could basically retire or chill or do whatever I need to do, because I only need like maybe like $45,000 to like really live a high quality of life a year, to cover like bills and everything. That's not even to cover bills. To cover bills, it's less, because I think once I get some of these debts, like my car and stuff, paid off, I'll need like less than $3,000 a month. It's like maybe 2,800 a month to live comfortably. So if I can make $90,000 a year from the interest that I earn with my assets, I could be still reinvesting while living off half of the investments as well. But anyway, and for the long term kind of demonstration of this video, I have some businesses and things that I have a business that is probably going to work out really well, that I'm kind of building, and I'll probably launch in the next year or so. I'm not going to get too much into that, and I'm going to go off of what like an average person, like what I am now, making with the average income, could do, what's possible for them, because I don't want to show. Because the upside of this business is, it's a highly specialized business, and I could be making a lot of money. I don't want to be, oh, you need $6,000 and you can do this. No, I'll kind of show you my investment budget, because I just want to show the average person like what really could be possible if you just kind of lock in and start working. So let's get into the other side of my investment portfolio. So I am going to be doing 35% high risk. So the high risk is really just cryptocurrencies. I kind of think that cryptocurrencies, especially with all the time I spent researching them, now knowing with things such as real world assets and the tokenization of assets coming on chain, kind of Wall Street moving a lot of their stuff over onto chain with the bonds and US treasuries, and kind of it's building a sort of like global sort of Wall Street thing, where, you know, assets across and that previously, are markets, like for example, stocks that were on the European Stock Exchange, that you'd have to be like a citizen of, the EU in order to buy. Well, so if someone in Singapore or China or Japan wanted to buy that asset, it's a whole hassle. But with cryptocurrency, it kind of bridges that gap and allows the tokenization and the exchange of a lot of these assets that are typically harder to get, or were regionalized, that were specific to the region that you lived in, you had to be a citizen of. Well, it kind of allows people, it kind of breaks that barrier and allows, these assets to kind of be traded in a very high volume liquid manner across the globe. There's also some other things because cryptocurrencies also encompass, various sectors like telecommunications, Wi-Fi, um, artificial intelligence, decentralized computational power. There's a lot of things that I think that cryptocurrency kind of is giving it has a high upside, which is why I'm investing into it pretty heavily. And I mean, we've already seen with Bitcoin, we've seen with Ethereum, and there's some things that I think that kind of where the direction of technology and where everything in general is going to make it a worthwhile risk in order to put into cryptocurrency and the means that I am. So out of this out of this 35% high risk asset portfolio, which is mostly cryptocurrency, it's all cryptocurrency. 20% of it is going to be into the top 10 cryptocurrencies by market cap, except for like Dogecoin and stable coins. And so what I'll show you real quick. So, I kind of see the top 10, like there's this coin market cap top 20, but 20 to me is, I don't really like, there's some good cryptocurrencies that actually do some stuff. And then like the rest is just garbage junk. That's the problem, is like 99% of these coins don't do anything. Like Ethereum is a good coin. Ethereum is where they're tokenizing, all the real world assets, and where Wall Street kind of like the main chain that Wall Street and major financial institutions are putting their assets on chain to be tokenized. BNB, biggest crypto exchange, right? Um, Deflationary coin, they're kind of burning off their token supply. XRP, I don't really like XRP that much, but it's top 5, so I'll hold it because it's top 10. So again, I'm going to hold the top 10. So that's minus stable coins and Dogecoin, because Dogecoin is shit. Um, Bitcoin, Ethereum, BNB, XRP. I'll hold Solana. I'll hold Tron. I'll hold Hype, Zcash, Leo, and then my rule is, since those are only 9 coins, I'm supposed to hold Cardano. I don't know how I feel about Cardano. I might get Monero instead, but if I want to be strictly disciplined, maybe I'll hold Cardano, and that would be my top 10, because then that's sort of like the ETF. It's kind of like S&P 500, where S&P 500 is the 500 largest companies by market cap in the United States. Well, I'm kind of making my own sort of index here with cryptocurrencies by just holding the top 10 and seeing this, and kind of saying that, hey, I'm going to bet on winners. If the market cap is 2.56 trillion and experts are kind of predicting that Bitcoin's going to hit 1 million at some point, we're probably going to see a market cap then upwards of 20 trillion, which means that some of these altcoins could have some pretty crazy runs as well if we're getting, an extra $18 trillion injected into the market in the next 5 to 7 years. So now let's go back to our little chart here. So 20% of my coins are going to be in the top 10 cryptos according to market cap, and then 15% of those are going to be in altcoins. I'm going to do a little bit of a higher riskier strategy rather than being like 25% and 10. I'll kind of show you some of the altcoins that I am watching right now and that I'm getting into. So here's some of the altcoins I'm watching. I'm not going to hold all of these. I right now hold BitTensor Tau. Near Protocol, something I'm looking at buying here pretty soon, now that I have my finances in order. Internet Computer, something I'm really interested in as well, actually, because I feel like it can compete in the same space as AWS, Azure, and the Google Cloud, since it's like a cloud service provider, but it's decentralized. So it kind of is almost like the decentralized cloud that AI and AI agents are going to build on, is kind of like my thesis. So even though it's had some bad price action, I feel like it has a potential upside. Plus, it's you can stake it. So that's what I like about like these coins, is you can stake and earn interest. So you can take your interest. I can take interest earned off this, put it into the low risk assets like the S&P 500, and then kind of create like this compound interest flywheel. I'm probably going to buy some Aether just because this is computational power, so GPU power and things like that. Looking at Peak as well, maybe to eventually make a buy. I think that's really it as far as altcoins. I do hold this one just because it's a mining reward for Bitcoin. So since Bitcoin's #1 and this one is now being accepted as a mining reward, because this DMT Nat coin is supposed to be help solve Bitcoin security issue with mining rewards being reduced. So they implemented Nat as an additional mining reward, so miners have a increased incentive to keep mining blocks on Bitcoin and further securing the network. So holding a little bit of this, and I might buy little fractions of this, like 1% of my portfolio, going in, maybe even half of one, because since this is being mined alongside Bitcoin now, and since Bitcoin is kind of like the what we're considering digital gold, right, like the gold standard for cryptocurrencies, this I think has some upside to it as well. So yeah, altcoins I'm looking at: Near, BitTensor, ICP. This one's interesting. FET. I'm not necessarily buying it just yet. an eighth year, and then I do hold some NAT as well, but that's a pretty small percentage I have in NAT. Peak as well, I'll be looking at too. But I like these coins because these are staking coins, so I can stake all these, take interest, and use it to kind of compound my other assets. So that's that 15% into altcoins. So now let's go into keys of the strategy, because this is crucial, and this is why, though, now that I've kind of conceptualized this, what was wrong with my investment strategies in the past, because I never really had a strategy to take profit. Everyone's like, oh, when do you sell? When do you sell? The key is you never sell, right? You have a strategy which allows you to consistently rebalance your portfolio to where it does take profit, but you're still reinvesting and you're still accruing interest and all of these things, right? So my strategy is I have to rebalance these percentages every quarter. And so what I mean by that is these percentages, right? 65%, 15%, 20%, 20%, 15%, right? These all have to be these percentages. So if, let's say, I can only have 35% of my money in crypto, well, what happens if these numbers, because crypto can kind of go crazy, right? What if we get a bull run and I'm looking at in 3 months, this 35% is actually now worth 50% of my portfolio, right? So let's just kind of do the math underneath that, right? So if it ends up becoming 50% high risk, well, if we get to a quarter, right? If this is what ends up happening, well, I can't have this. So I have to sell off the high risk to make this, then again, 35%, and then to make this 65%, right? So this is going to ensure that I'm securing profits along the way, right? And so one of the keys too I'm going to do is I'm going to use dividends and a portion of the interest earned from my low interest funds to reinvest into the high risk portfolio. And likewise, it's going to create this sort of cycle. So you'll have high risk going into low risk and low risk going into high risk. So because the high risk were in staking yields, so I'll use the staking yields from cryptos and reinvest half of those into crypto and half into low risk assets, and I'll compound this infinitely. So, oh, and then this is a key as well. So never touch the low risk assets to rebalance high risk if percentage drops too low. Only use money earned by working to put in the market. So yeah, if the high risk has a drop because crypto is volatile, if crypto ends up dropping and my high risk ends up being like now worth 20% of my total portfolio, well, I'm not going to sell off their low risk assets to put into the high risk, because the low risk assets is kind of like my profit secured, right? So I will only use money that I earned by working to put into the market, to put into high risk assets. So let's kind of show something like give you a visual example on a calculator of how this would work. So let's say I have $1,000, right? And so of that $1,000, right, we know that 650 is going to be low risk, and then 350 will be high risk. So let's say in 3 months, the high risk ends up being, now it doubles, right? Because the crypto market can go up like 5x sometimes in a year. And this could actually happen and has happened. So let's say now, after 3 months, my high risk is worth 700, and my low risk is worth, maybe the low risk goes up a little bit too. So 750 plus 700. So I started with 1,000. I have 1,450 now. Well, what's the percentage now though? So 700 is in high risk, right? So then I have to look at that and say, okay, 700 divided by 1,450. That's 48%. Well, according to my strategy, that can't be that way, because only 35% of my portfolio can be in high risk assets. So I'll have to sell off 13% of this to rebalance it. So then I'll have to go 13.13. It was 0.35 times 1,450. So I'm going to have to sell off 13.5% of that. And so then I'm going to have to take 195. So I'm going to have to put 195, and that's going to go into, which was now the 750, which is the low risk. And then if you take, so I have 945, and then we're going to do this. 50 minus 945. So now I have 945, you can see here, of high risk and 505 of low risk. So I've secured profit, and this 945 will keep earning interest, and this 505 will keep earning interest, right? So that's how I'll go about it. And if this 505 dips lower, well, I'm not going to touch that. I'm just going to keep investing according to percentages. So, and now for the short-term strategy, I'm going to kind of take a little bit heavier, more risk, higher risk kind of approach to this. So I'm going to invest heavier into crypto for 2026 because we are kind of, I feel like, we've been in this bear market for a while. So I do feel like we have the potential to hit a bull run here soon. So I'm going to be going 75% into high risk and 25% into low risk just for 2026, maybe halfway through 2027, because if Bitcoin hits a new high, I want to maximize that as much, but I'm still going to be rebalancing. So, so here in the next quarter, I'm going to have to sell off a bunch of my portfolio to be able to get these percentages here that we see here, right? So my investment budget, this is where we start going into where I'm trying to kind of show the average person what they can do. So my investment budget is $1,500 a month. I have paid off some debts and I have enough money and I'm from working to where I have $1,500 extra after all my bills are paid off to where I can invest $1,500 a month. So let's go over my low risk assets. So my low risk assets are VOO, which is a S&P 500 ETF. I have IAU, which is a gold ETF. I have SLV, which is a silver ETF. And then I'll put some money into higher interest savings. And these will be invested according to these percentages here, right? My high risk assets, again, I've gone over this, top 10 coins in cryptos other than stable coins and Doge and alts. BitTensor, Near, ICP, ATH, Peak, and DMT NAT are the coins I'm looking at right now. Now I'm going to go over and show where I am as far as my finances and kind of give a little update for that. And then I'll end the video and then I'll kind of show off all that stuff. All right, so let's get into this. So here's my financial overview right now. So as of right now, my total type of assets and total value in cash, I have $4,200 cash. Right now, I'm kind of building up a little bit more cash. I haven't 100% distributed everything amongst these percentages yet because I'm going to have a solid cash base. I'm thinking maybe, $7,000 to $8,000 just because you always want to have, in my opinion, a little bit of cash in hand. That way you have something that's liquid. That way if you have something like a car breaks down or you have a personal emergency, you have cash on hand. So I'm thinking maybe $7,000 to $8,000, having that cash, and then I'll start reallocating my money into these percentages that I've set. So I do have some crypto. So if we look at here, right now, now this month is I'm going to start getting to the other coins and start really sort of solidifying my strategy, because I kind of just came up with a strategy because I've been saving up a bunch of cash because I wanted to have everything, have my cash built up a little bit more before I started putting money into the market again. So what I'll be doing is my next rebalance date is August 1st. So I'll kind of look at this whole thing as a whole, and then I'll rebalance everything according to my strategy. So even if I'm not like necessarily wanting to take my cash and put it all into here just yet, I'll probably be doing that by the end of the year, since I have $1,500 a month now to invest. So, if we do, it's May 23rd, so that's probably another, what's that, 1,500 times, let's just say times 6. Yeah, so I'll have another $9,000 of capital that I should have. Plus, I have some other bills and things that I should be getting paid off, so this could actually be even a little bit more. But for just the sake of kind of showing, I feel like the average person what they could accomplish, I might just stick with this number and show you how quickly this could go to 100,000 over the next 4 to 5 years. So let's look at my other assets that I have here. So I have this BitTensor. This is staked into RootTau, which is earning anywhere from 9% to 7% a year. You can see here. So it's about, how much is in that? $411, because I have 1.48 of Tau total staked. And that's earning about 8 to 9% a year. And then in BitTensor, which, obviously do your research on this. With BitTensor, I'm taking a similar approach to crypto, where BitTensor is basically like an incentive layer for AI projects. So they have all these subnets here. And these are just like tech companies that are being built, and that BitTensor incentivizes to complete goals or earn, Anyway, it's a whole thing you have to research. I won't go into it for this video. But I'm holding the top 10 by market cap. And then a couple other ones which are earning high emissions. But basically, it's the same approach I have with crypto. I'm betting on winners. If BitTensor is going to be legit and AI is going to go crazy, and these companies are, because Targon's actually pretty interesting. So Shoots, they're actually kind of serving and earning real revenue by serving computational power and inference to other even like projects in the world, and AI projects and things like that, and training models, all this sort of stuff. Yeah, I'm gonna hold the top 10 here because if this just goes up like sort of like an index does, that could be something that's nice. Plus, the top 10 coins are in a little bit more interest. So if they even move in a similar manner to how BitTensor does, which looks like they have been, they kind of move at a steady pace, sometimes even outgrow it. You know, I'm earning 42, 36, 33, 23%. And I'm rebalancing this as well. I'm keeping a 50-50 thing. So every quarter I'm gonna look at this, and if my alpha is like 85%, I'm gonna have to rebalance that, put it into 50-50 there. And also too, like this kind of goes back into having to make sure that none of this goes over the original percentages at 35% high risk, and making sure that these maintain a balance of that as well. So yeah, so total then I have $366 in BitTensor subnets. Also have 1.2 Sol staked. Solana is the top 10 coin. Right now, again, my percentages are not like all like according to my strategy right now, just because I just started this and my rebalance is for the 8th of August, or sorry, for the 1st of August. So I'm gonna rebalance this all and make it all look kind of like according to my strategy here in a little bit. And I feel like the next year I have kind of time to kind of build all these things up. And again, I'm not going to touch cash, so I'm building this up now with my investment budget, now that I kind of have my money and my employment and everything like that secured for the next little while, or at least to the point where I can have this $1,500 a month on hand to invest. Then I have a little bit, just little fractions of Bitcoin, some of that DMT and that, a little bit of Peak, and then some USDC that's just kind of idly hanging around a wallet, for a total, as of May 23rd, total value of $5,150 of total money that I have right now. So yeah, I'm gonna kind of do probably monthly updates on like where my money is. So, once a month, I'll kind of look at this and then be like, hey, look, yeah, here's how my total has grown. Here's where my assets are allocated. And then obviously we have to look for these rebalances and things like that. I could rebalance maybe in November instead, since I'm just starting this. But, once about 6 to 8 months, once everything is in full swing, it'll be like super, like, I'll just be like here, right? Because it's literally everything's going to start being like this. Once I start having about, $10,000, $15,000 plus in assets, that's when I'm really going to start looking at, okay, let's really start making sure everything is disciplined and everything is strictly according to these guidelines. So, but again, yeah, for the next little bit for 2026, I'm taking a little bit of a riskier approach. And then after that, though, I'm still rebalancing every quarter the same. And then after that, everything is going to be according to this. So that $1,500 that you're seeing here is going to get split up like this, right? So 65% of that 1,500 is going to go into my low risk assets according to these percentages, and 35% of my money will be going into these high risk assets according to these percentages. But yeah, this is my path to my first $100,000. If you like this video or anything, like and subscribe. This is going to be like kind of a little monthly documentation series that I do. Maybe you'll find some value out of it, and maybe if from me talking, I've been spending my life trying to learn how these markets and how to become wealthy, reading books. And I think definitely the S&P 500, gold, silver, I think that's definitely, if you just kind of kept your money in these assets here, you'd be fine in the long term. I'm trying to get my money a little bit faster though, which is why I spend so much time in crypto. And I think crypto is kind of an emerging market that has a potential high upside. And if you manage your risk accordingly, this is kind of a high asset allocation, honestly, but I'm okay with taking the risk because I still have this. And since, Goldman Sachs and BlackRock and Fidelity and all these major companies, JP Morgan, they have sort of like $1 million price targets for Bitcoin. We still have like another 13x or something until Bitcoin hits 1 million. So I think that there's some potential upside that makes it worth, since I have, my investment strategies and I have sort of experience with doing this. It makes it worth taking this risk because, again, I can always kind of move it into here. And if if crypto fails and doesn't work, I can just go 100% into this. And I think this would kind of get me to this 100K and more eventually, because all of this is probably earning on average about 5 to 6% a year. Between these, maybe more, maybe 7 to 8, somewhere around there, between 5 to 8%. And so if you're getting 5 to 8% a year, which this will be the last thing I show, we'll kind of go into showing how, like, why I'm so confident of why this will work, because I kind of have a very thorough understanding of how compound interest works. So if we look at how compound interest works, right, let's say I have $5,000 and I do $1,500 a month and I keep it in there for 20 years, and I get an interest rate of, let's say, the 5% a year, right? And let's just compound it annually. You can see in 20 years, I'll have $608,000, right? And so since I have, my money's going to, this is going to go up even a little bit more, since I'm going to have some bills that'll pay, some bad debts, you know, like my car, which will also lower my insurance premium. Plus I have a couple credit cards will get paid off, you know, I'll have even more. And then again, if I have my business that works, that'll go up as well. But, you know, I'm just going to show basically what I feel like what the average person, what the average person could achieve. So if we look at this, I mean, $608,000 from just getting 5% a year. And this is like, you know, if I only had cash, think about that, I wouldn't grow at all. So the total interest I would earn, does it show the interest? Oh, this one's kind of weird, huh? So yeah, so look, I would only have contributed 365,000 over 20 years, but I'd earned 608. So I'm earning like an extra 200 and was that $43,000? Yeah, almost $243,000 of interest. So yeah, I mean, if you just kind of stay consistent after 10 years, you could, I could, if I only earned 5%, I could earn 234%. Let's kind of do some more hypotheticals, right? So if this is my total investment starting, we have 1,500, and let's say cryptocurrency goes up 10x. Let's just give it 15% a year. Let's say that's what I earn across my, what I earn with my total portfolio, right? With the crypto, right, being staked. With this, let's just ballpark it, right? Do 15%. How much does this turn into in 20 years? 2 million. You see where it starts going? So we'll have put $365,000 over the course of 20 years, and we'll have made about 1.57 million or something like that. That's with earning 15% annually. That's if the cryptocurrency works and you know, the world doesn't go into Armageddon or whatever. Who cares, right? I'm not planning for that. I'm living as if everything's going to be okay. I feel like that's a better way to go about it than like doom scrolling and be like, AI is gonna take over. Oh my god, like the robots, like just fucking working. Stop thinking about it. I'm retard maxing, dude. That's what I'm doing. I'm retard maxing to get rich. I'm like a monkey. I'm like, numbers good. I get numbers. You know, think about it. It's just bananas, bro. I'm getting 1,500 bananas a month. So 1,500 banana, make banana bigger, right? That's literally what I'm doing. I'm literally retard maxing this, dude. So, you know, if I can get 15% a year with this strategy, again, this is the bullish case, which it could be even higher. I mean, some of these coins, if you research crypto, I mean, ICP, you know, Tau, these are, you know, let's just do this real quick and then to end the video. So ICP, 1.4 billion market cap, near 3 billion, BitTensor 3 billion. I think these kind of have some good upside. If we compare that to where the top coins are at, Bitcoin with 1.5 trillion, right? Ethereum with 255 billion. So just there alone, like, I mean, there's multiples upon multiples in this. If we look at like even Solana, 49 billion in Solana right now, right? Solana's market cap high was what? 128, 130 billion. So you could be looking at 30x's for some of these altcoins, which actually have good use cases. You also could not, keep in mind, I'm not saying it's not guaranteed. It could happen though, right? We are looking, market's kind of turning green over right now. We had a little bit of a drawdown this weekend. I think we're switching to a bull market though. We had, you know, 6 months of bear, so I feel like we're going to get some good bull, especially since everything is kind of where it's going with AI and tokenized assets and all of the stuff being moved on chain. I think we're going to see some sort of some good upside, but we'll see. You know, who knows? But again, if it happens, it happens. If it doesn't, you know, that would be that nice to get that 15% and be looking at $2 million, right, off only 1,500. But if, again, I can always, you know, if it doesn't work in the next 2 to 3 years, I can always go back to this. And then, so, you know, you can get to 45, 50, have almost $1 million. And how much is, you know, $600,000 earning at 5% a year? Let's look at it, right? So 608,000. I mean, that's extra 30 grand a year. That's like full-time money for some people, dude. So, you know, then if you do, let's say if you, because I'll eventually be able to get to this. So let's say we do 2,500, right? And we do 5% a year. Now you're looking at $1 million in 20 years if you can do 2,500 a month, right? So now that's earning 50 grand a year. So now that's more than what most people are making full time. And let's say you're 25, you start doing this, you could be 45 with $1 million. Well, 45, man, that's like only half your life. People are going to live forever, right? Not forever, but they're going to live a lot longer. The average life expectancy is like 80. So if you do that for 30 years, you're looking at 2 million now. I mean, that's most people don't even have that. If we just did a low sort of 1500 30 years, you get to 55 and have $1.2 million. And that $1.2 million would be producing 1.2, sorry. All right, 20,000 on 1.2 million. 60 grand a year. You could be earning, if you're only earning 5% a year. So, I mean, yeah, it would be nice. This is just something I think is a productive kind of hobby to try to get money, I think. So, but yeah, that's basically it for this video. I'll do an update again probably in another month. But if you enjoyed this again, like and subscribe. If you want to tell me, I don't know if I'm an idiot in the comments or whatever, that's fine too. I'm just going to keep kind of doing this. And I'll keep this updated. So we'll kind of look at this next month and then see where I'm going and see, am I going to be broke or am I going to hit this 100K? That's the goal. So I think I'm locked in and I feel like I have the wisdom and the knowledge and experience to actually get this now. And with this strategy, I think it's going to work. So, yep. Thanks again. Have a good day. Bye.